All right, so what's on the screen right now is vol M. It's for the SPX, as you can see right here. A couple things come to mind when I take a look at this. So the first thing that I always look at is how wide is this distribution, and the tighter the distribution, the more defined, I guess, the market speculation is to the upside. And we have a little bit of space that's developed between these 2 points, but in general, it's a fairly tight distribution that we're seeing here, and I think that's important. That's indicative, and you can see it's actually starting to get very, very tight about what we call the lin fit line, the linear fit line. This is an artificial thing. The market has no respect for this in general, but we use it, and the market certainly does have respect for each of the centroid points that we're seeing here. So a couple things come to mind right off the bat. So here we are, we're 15 minutes after 10, so 45 minutes into the market, and you can see we've got a little bit wider distribution on the put side of the equation. So market participants are doing something, and just given the upward slope here, this tells us that they're transacting closer and closer to price. They're probably realizing that they're not going to go in the money today, and to a certain extent, I am believing, although we can't tell opening or closing from volume, I am believing that the broad market is capturing whatever remaining extrinsic value that they have here. Now, we're not seeing huge price movements in this, right? So I'm not jumping on the bus here saying, oh, they're closing. No, you can't do that. But what you can say is that when you see a wider distribution like this compared to what we see up here, and this is the point that I want to convey to everyone, when you see this wider distribution, it's noisier, and that means it's not as focused. Speculation tends to be focused. Not that this is panic or anything, but frankly, we've got market participants who, from the beginning of history to today, because this is the 0 DTE indication, are now getting into a position where they're closing and doing whatever they feel they need to do. Now, of course, a lot of the OI of today was placed in the last few days, and we've seen that with the value command and with some of the other tools. So what's the takeaway? I think market participants are getting out of the shorter positions, and that's constructive if you're a bull. The tight distribution here says this is not necessarily a raging bull, but I want everyone, if this trend continues, the first thing I look at is where do they cross, and we'll talk a little bit about ROC here in a second, but if the trend continues, they're going to be right in this particular area. What is that area? It is going to be very, very close to 60.30 to 60.35, right? So you can see over here, I just zoomed in. This intersection, we tend to stay between the lines until we don't, right? So if the markets continue doing what they're doing, this is the indicated area. Now, I wouldn't get aggressive here, and the reason I wouldn't is because the ROCs, the rate of change for both these lines, is pretty significant. The call has a very strong positive value, and the put has a very strong negative value. What does that mean in the big picture of things? Well, let's go take a look here. So here's the 0, and here's basically the quantification of that rate of change that we're seeing for every print. Let me just double click this. For every print here, it pulls this line up. So if this is trending up above, we get one thing. If it's pulling it down, or if it's trading below, it's going to pull it down. So right now we're slightly above, and it's moving this line upward, which is important. The same thing here. We're trending down just a little bit, and we're pulling this red line down. So they're going to converge under this scenario. So what does that mean in this context? They both have positive slopes. They're both going up. Okay, so we're entering a scenario where we're going to put a lot of pressure on 6,000 today. As long as these remain positive, right? Now, they can slow down, and that's what this is telling us, right? We're slowing down in that positive slope. This is an outlier here. But we're slowing down. We're slightly negative in the rate of change here. We're slightly positive in the rate of change. So the green is coming up. The green is pushing up. The red is pushing down. So we talked about this today, and you can see the 6051 is indicated in the red. The reds are positive right now. So this is actually under this, if the market doesn't change course in its speculation, if we break through 6,000, we said this morning, in fact, let me just go grab this morning's markup here. I'll just go down to the SPX channel. Right here, game plan. So here's what I said this morning. If we get above this, because we have the 0DT COI here, we got a lot of contracts sitting there, right? That's a lot of positive net OI. If we can break through that due to market volume, participants, closing of puts, you know, it all adds together to give us positive deltas or long deltas. If we break through that, a natural location for us to start walking up, we call this a gradient. You can see it's at 11,000, then it drops down fast to 1,400, 1,100, 1,200, 3,200, almost 3,500, right? So we're going to be walking up a wall. So once we get above this, we think there's going to be a lot of short covering, a lot of people realizing that it's going to be very, very difficult because of the magnitude that we see here, this 12,000 that we see right here, 11,895 net OI, plus whatever the market action is doing. And right now, we have indications that we have speculation going in, right? And if you look at volume, let me go grab this other chart so we can put all the pictures together. They all matter. If we look at the volume, if we continue to see volume transacting, you know, in fairly significant levels here, this you can see over here, this is centroid volume, right? This is the center of the distribution. If we start seeing this looking strong and playing up in the, you know, 400, 500, 600 center of volume distribution, then that could be enough to bring us, to bring us north and break that 6,000 level, which is right here. And then when that occurs, in fact, let me just go back to this chart here. And when we break that 6,000 level, then this becomes in the money. All these calls go in the money. This is for the 0DTE. That should get market participants fairly, okay, we got a green light, and then we can watch volume to see if we're going to walk up on this distribution. So, you know, on pullbacks, say to approximately 59.80, which is what we said is the top of DS, right? We gapped up into this area. There's a reason that we put this out there. There's a reason these levels exist, right? And there's a reason, most likely, we see this all the time. When we gap, we usually gap into a clear area, right? So this is from this point, this 59.75 on upward, we're in a call-dominated, net call-dominated regime. Right, so now things are pushing up, and as we get out of this little pocket that's at the 85 strike, if we can get enough volume to start pushing us up into this 6,000 level, and if we can push through 6,000, this is a very significant level, by the way, then we could move north. Right, so let's keep an eye. The takeaway of all of this: let's keep an eye on the Vol D, or excuse me, Vol U, Vol M. Constructs. Vol U is multiple day. Vol M is intraday, 0DTE. Watch what the ROCs are doing, right? Watch to see that these remain positive, right? That'll be fairly important, I think. And if they do remain positive, then there's a very good, and if volume is coming up, then there's a very good chance that we could push up and through the 6,000, although this is a very significant level. And if we do, then we expect just to overtake the charm that is here, and effectively really start pushing aggressively up. You can already see the delta imbalance down here in the net OI, in the net stat command. So we're already in the money, call dominated on the left hand side. It's just going to continue to build as we stay in this area. All these calls are charming their way up, and that's going to be very, very important. So hopefully you find this useful. I am looking to stay above the 75-80 zone. If we can stay above the 75-80 zone, I will remain bullish for the day. I think we're going to make pushes upward towards 6,000. We'll see what happens, and we'll check in here. So long from 75-80 in that zone, with a profit target up underneath the 6,000. And then if we push through 6,000, reestablishing a position to the north. If we can't get through the 6,000 strike, as I said in my notes this morning, short from 6,000. I know that is going to be counterintuitive, but this is a major level to have to get across. And right now, it's working against us. Out of the money calls of this magnitude in the right-hand plane, while it's above us, the charm is decisively on the right-hand side of the equation here, pushing us down. So keep an eye on NetStat, keep an eye on Vol M, keep an eye on what we're looking at here, and we'll check back in as we see trades avail themselves. Thanks, everyone.